let's start off with the GDP expectations. We know the retail piece, the consumer piece has been quite weak. Do you expect to see the reflection of the deleveraging campaign and all of the chaos really plaguing the property sector to be reflected in these numbers?
We do, and the third quarter GDP numbers should look pretty soft. We're expecting 4.8% year over year. There are some mixed cross currents. The property sector, as you mentioned, has looked very weak in the last couple of months and should be certainly one softer spot in the economy. We also saw a very weak manufacturing PMI for September. On the other hand, we are seeing a reduction in COVID-related restrictions, which should help retail sales, at least on the margin, and exports have held up quite well.
When it comes to the longer-term drag on growth, how much of a structural worry is what's going on with the broader property market? And we know really myriad industries and subsectors that are affected by it, not to mention the overall wealth effect.
It's a big, big driver of Chinese economic growth over the past couple of decades. We estimate that, broadly defined, the property sector, including residential and non-residential property, and all the upstream industries, the materials and so forth that go into it, drive close to a quarter of economic activity. And as you look out over the next 5 to 10 years, clearly the demographics suggest a declining demand for new property. In the short run, the biggest constraint is really the supply side constraint around credit, the credit pressures on developers, and the restrictions on banks' mortgage lending to households. Those things we think are the biggest factor in the next 12 months. But then beyond that, it's really going to be the demographics and the demand that are the fundamental constraint on housing. So we are likely to see a smaller contribution, in fact, in some years a negative contribution from the broader property sector going forward.
Will those be self-determined constraints by policymakers in Beijing? Because Goldman Sachs, despite all of the uncertainty that you're talking about, is now saying that you no longer expect Beijing to cut the RRR this year.
I think self-imposed constraints is a good way to put it. In the short run, these regulatory constraints are really something determined by the authorities. They want to reduce leverage in the property sector and longer-term risks, even at the cost of lower short-term economic growth. So they could calibrate that and ease up somewhat as needed. And in fact, the PBOC press conference that you referred to at the beginning was, I think, one way of acknowledging that they have eased up a little on the mortgage lending and property developer lending to try to maintain some stability in the sector. So from that perspective, they are adjusting. But I think the broader message is that they remain determined to control longer-term risks and to bring down the level of leverage in the sector. And in that context, the comments from PBOC about RRR are slightly less dovish than they could have been, in the sense that they can provide liquidity in multiple ways. That a RRR cut would probably be perceived as the most dovish of those. They're deciding instead to do so via other tools that don't necessarily lower the cost of funding for banks.
What are the implications for the global economy?
Globally, there is the clearest thing that we've seen in terms of spillovers from the property sector has been on the commodity markets, particularly in iron ore in recent months. That said, property is a more domestic sector than many others. So a lot of the implications will be for China's economy. There will be some spillover effects in terms of imported materials and equipment, but less so than you might see were there a dramatic downturn in other parts of the economy. From that perspective, the bigger question is whether authorities are able to contain the fallout from the Evergrande situation and the property sector and limit the spillovers to the rest of the Chinese economy. If they're able to do that and keep growth in, say, the 5 to 6% range for next year, the spillovers to the global economy will be pretty limited. But if we see a more severe property downturn or one that spills over into the broader Chinese economy, then the ramifications for global growth could be more severe.